Hello guys, welcome to part 2 of the fractal breakout strategy by Bill Williams. I'm Peter from experttrading.co.uk and I'm going to walk you through a few trades and how you would determine a trade setup and which direction to take it. Because a lot of the time with the fractals you might be overwhelmed by the amount of fractal signals you see. A fractal are one of these arrows. An up arrow is an up fractal, a down arrow is a down fractal, and which one do you take? Do you take the up one, do you take the down one? Which break do you take? So what we're going to do is we're going to take you through a few trades. So let me show you when not to take a trade. Well, a clear time not to take a trade is when there is a clear downtrend. So what we've got here, if we move over to here, because you can see this, where my mouse is now, this is an up fractal, and it is broken above this red line, the red alligator line. Now, it's been broken, so technically, according to the Bill Williams book, you should enter that trade. You should enter it here. But then it only goes up a little bit and then really plummets down. Now, the way to avoid this is just not to enter the trade. You do not enter a trade which is counter trend. Always trade with the trend. The trend is your friend. You must have heard that. The trend is your friend, but not all the time, okay? In this case, it is your friend. Right, so what we've got is we've got a trend line here. Alright, what constitutes a trend line? It's 3 touches. 1, 2, 3. And then when it breaks this trend line, right, we don't take a trade. We don't take an up trade, we don't take a down trade, we don't take any trades at all. Right? Until another fractal forms below the alligator. So completely below it. The book says when it breaks below the red alligator line, but we say no, we don't want that. Okay, so let's just get rid of this line so you can see more clearly. Right, so what we're going to do is we're going to take this example. So we don't take this fractal, we'll take this one. So when do we take it? Right, so we're in a downtrend. Okay, you can see here it is a downtrend, and it's below. The fractal is completely below the alligator. All right. So here's the fractal. So according to the Bill Williams book, you have to put it 5 points or 5 pips below the actual fractal formation. Right? We don't think you should do that. We think you should wait for another sort of confirmation, and we actually should think that you wait for the daily chart to form the fractal and then you manage it on the 4-hour chart, and this is essential. Never trade fractals on a time frame lower than the daily chart. Okay? We don't recommend it because you'll get overwhelmed by the number of false signals that you get. Okay, so here's a fractal, and there is where we want it. We want it on 1.6065. Now let's go over to the 4-hour chart. Okay, and let's see where that is. So that's back here. Right, so that's over here. Over here, here it is. Right, so this is the fractal we saw. 1.6053, round about that level, 6065. And this is where the fractal is formed. Now the only time, so let's add this here. So this is what we want to enter here, right? So that is the daily fractal, and we manage it on the 4-hour chart. So when it breaks the fractal, which it does, it breaks it on this bar here, where the horizontal line of the cross is. It breaks it on that line. Okay? Now when it breaks it, we don't enter the trade. We wait for the bar to close below the fractal. If it doesn't close below the fractal, we've got no trade, even though it's signaled. This would save you a whole load of false signals and false trades. You want to wait till that candle, sorry, not candle, till the bar closes below the fractal. Let's zoom in here and go down to where the fractal is. Right, so let's just see, here it is, yeah. Right, so we want to wait for it to close below. So it has closed below. So here it closes below, and we say, okay, cool, we enter the trade now. No, you don't. You don't enter the trade. So it's closed below, but we want more confirmation than that. What you need is a penetration and then confirmation of momentum. So once this bar closed below, you're going to wait for the next bar to take out the low of this bar. So I know what you're thinking, oh, this is confusing, but it's essential. This is another thing that will save you a lot of bad trades. Because the forex market is so big, because they're trading about 3 trillion a day. I mean, last year there were 1 or 2 days when it went up to 8 trillion turnover in one day. When you get a push for a trend, it's a push of billions and hundreds of billions of dollars into a direction. So you get a lot of false signals. It has to go up like a wave and then come down, right? So therefore you need the confirmation, the penetration, right, and the close below this level, this fractal level, on which is from the daily chart. This is the 4-hour chart, remember, because this is where we're managing the trade. And once it closes, you're waiting for the next bar to take out that low. So what you can do is, once the 4-hour chart has closed there, you can actually put a sell order in to go in here. And then what you do is you just wait for it to take out that low. So where do we put our stop loss? General rule that we normally use is put your stop loss at the nearest up fractal. So what we want is, we like to also put it above the alligator. So here's the nearest up fractal and it's above the alligator, so we will put our stop loss here. It's quite a fast stop, but these are long-term trades, so you're looking for a lot of pips. You're looking for about, at least 300-400 pips on these trades. Okay, so then what happens? You go down and it goes down here, forms another down fractal, and then goes back up and forms another up fractal. These couple of up fractals are just completely invalid because it moves down and into consolidation, and it goes up here. So what this offers us is an opportunity to move our stop once this moves down. So what you would do, you'd move your stop loss from up here to down here. It's still above the alligator, and then down here you can add, because this is a down fractal, you can add to your position. You can enter the trade again. So add to your position. And then what we're waiting for is, we're waiting for it to break the low of this new fractal that has been formed. Break the low. It sort of did it on that one. It generally did it on this one and then took it out. So we'll enter the trade down here. Move your stop loss to up here. And then wait for the trade to make its move. And then it goes down to here. And then generally, if we see, I don't know, about 4 or 5 up fractals. After we see about 4 or 5 up fractals, before a move's ended, we tend to exit the trade. And because we don't want to stay in here forever, because it could move back up and all our hard-earned pips could be lost. So over here, I mean, on this first trade, you would have made, what is that, 1666. If you exited around here, see that's 400 and something pips, and then add to that from here to there, that's another 200 and something pips. So altogether in this move you would have made about 600 pips if you adhere to our rule. So I mean, you need to use a little bit discretion on the exit here. The stop loss, there are very strict rules for the stop loss and managing your risk. But over here you need to ensure that after about 4, maybe 5 up fractals, before you really see a downward push, exit the trade, take your profit, or make your stop extremely tight. So here's one example for a trade, and I hope you learned something out of that.